Most of today's program at the 15th Hong Kong Forum is quite rightly devoted to our fair city nestled here at the bottom of the Pearl River Delta and the giant north of us, on which so much of Hong Kong's well-being depends. Our panel is looking further afield to the Greater Asian region, hence we've got George Lam, and we've got Song Hoi, and we've got me representing First Pacific. My company is an investment management and holding company located in the fastest growing region of the world in Asia. And like any company, we're focused on delivering returns to our shareholders, and we do that by participating in the economic growth in the jurisdictions we invest in. I'm going to skate quite quickly over what exactly we do and then go into some of the economic foundation for our optimism about this part of the world that we're focused on. There we go. An important notice for you. These are the 4 areas where we're invested. In emerging Asia, we feel that telecoms, food consumer infrastructure, and natural resources have got strong prospects for growth and are limited on the downside. Now, the companies we're direct owners of are portrayed here in proportion to the value of our investments. As you see, they're currently worth about $9.2 billion. I'm going to skip over my script a little bit. This is the size of the assets that we control. We've now reached a point in our evolution where we've got group total core income of approaching $2 billion and revenues on the group side about 9 times bigger than that. And that's enabled us to have a very strong dividend payout and a vigorous share repurchase program. But really, this is the kickoff point for looking at the large and young ASEAN markets that we're focused on. These 8 countries, they're ranked here by per capita GDP. They've got a median age of just under 26 years. We were talking about this in the green room earlier. They range from just 22 years in Laos, and that's barely old enough to buy a glass of beer in the United States, to a relatively ripe 33.7 in Thailand. Now, in any case, these are all very young. Here in Hong Kong, the median age is 43.2 years. In China, it's 35.2, a bit older than in Thailand. And in the European Union, the median age is 41.9. In Japan, 44.6, where the population is shrinking. In the USA, it's a relatively youthful 36.9. Now, among these 8 ASEAN economies that you see on the screen, the average median age is a full 10 years younger than the most youthful of the biggest economies of the world, 26 versus 36. To those of us familiar with Japan's lost decade of little growth, and to those of us growing increasingly worried about Eurosclerosis in the European Union or the aging of China, these are promising markets indeed. Some of them are quite large by anyone's standard except China's. Indonesia has a population of 250 million people, pushing 300 million, as George was saying. The Philippines, about 100 million, Vietnam, 90 million, and so on. Laos, as you can see, is quite an outlier here. Its population is smaller than that of Hong Kong. These 8 ASEAN economies, they're all clearly growing very fast if you look at these numbers here. 2 years ago, Philippine GDP was around $250 billion, as and expected to double to $517 billion by 2019, and that's just 5 years from now. Myanmar's GDP is expected to double in that time as well, and so is the Laotian economy, looking at those percentage figures. In fact, the average increase for these 8 economies is expected to be around 78% over these 7 years. The data I'm using, by the way, is lifted straight from the International Monetary Fund's World Economic Outlook, published a couple of months ago in October. The forecasts, these data are forecasts, of course, they're not fact, but they are produced by some of the smartest and best financed economic groups looking at these sorts of questions. All right, let's return to the numbers. Economic growth is all well and good, but companies like mine focus on spending power. There's not a lot of upside in us investing in a toll road in Thailand if not many people can afford a car to drive on it. So a look at per capita gross domestic product will give us an idea of how a given market can develop. Right, these are per capita GDP numbers in US dollars. Malaysia and Thailand, as you can see, are far and away the most developed. Indonesia, where we control, my company, the biggest food producer, is in third place, followed by the Philippines, which is where my company's got its the biggest investments. It's a very wide range portrayed here, from barely $950 in Cambodia to more than $10,000 in Malaysia. That's 2012 numbers, as you can see. The smaller, less wealthy economies like Myanmar, Cambodia, and Laos present daunting challenges to the would-be foreign investor, and their small populations and low wealth can be difficult hurdles to overcome. But those of us who manage to overcome bureaucratic barriers, red tape, and these other obstacles can find rich prospects. This chart here resets everybody's GDP per head figure at 100 in 2012 and shows the growth the IMF forecasts over the 7 years following that. As you can see, Myanmar is rocketing ahead with a 90% increase over those 7 years. A slightly surprising second place is the Philippines, showing projected growth of 80%. These are indeed promising expressways to success that these countries are offering the potential investors. We're happy working in this geography, and we're looking forward to growing with them. In keeping with the theme of this panel, they are indeed our pathway to Asia success. Thanks much.